Well, welcome to today's webinar. I'm Sarah Hanks, CEO of CrowdCheck and CrowdCheck Law, and a board member of the Crowdfunding Professional Association, which is hosting this webinar. The CfPA's mission is to act as a trade association for online capital formation, supporting the development of its members, encouraging participation and awareness in crowdfund investing across the globe. We promote industry best practices through educational events for all constituents in the crowdfunding ecosystem. We're joined today by Charlie Guidry of the SEC. Charlie is an attorney with the Office of Small Business Policy at the SEC in the Division of Corporation Finance. The office assists companies seeking to raise capital through exempt or smaller registered offerings and participates and reviews SEC rulemaking and other actions that may affect small businesses. He's an experienced securities attorney who's held several positions at the SEC and who was formerly in private practice in a DC law firm. So Charlie, take it away. Tell us about these proposals.
Absolutely, will do. Thanks to the CfPA for having me on today to discuss the Commission's recent proposal to amend the accredited investor definition. Before I get started, I need to say my mandatory disclaimer that the views that I'm sharing with you guys are mine, they're solely mine. They do not necessarily match the views of the Commission, of the Commissioners, or of any other of the staff. So let's talk about December's accredited investor proposal. I think of it as in three parts. Number one, it adds categories of people. Number two, it adds categories of entities. And three, there's a miscellaneous aspect of it. We'll take each in turn. Adding categories of people. The Commission is proposing to add 4 categories of people. The first category are those holding certain professional certifications or designations or having other credentials. The Commission is proposing to add to the accredited investor definition a process that would allow the Commission, after considering a non-exclusive list of attributes, to designate by order certain professional certifications and designations and other credentials as qualifying natural persons for accredited investor status. This list of attributes includes that the certification, designation, or credential arise out of a test, an examination, given by a self-regulatory organization or other industry body, or by an accredited educational institution, and that examination, that test, has to be designed to demonstrate comprehension and sophistication in securities and investing. The proposing release preliminarily identifies the Series 7, Series 82, and Series 65 licenses as appropriate credentials to be included in an initial order that would be issued at such time as any final rule would be adopted. Let's talk about all 3 of those series. The Series 7 license qualifies its holder for the solicitation, the purchase, and or sale of all securities products. It is the General Securities Representative exam, license, and you have to be associated with a FINRA member firm in order to sit for the exam. The Series 82 license qualifies its holder to assist in the sales of private securities offerings. It is the Private Securities Offering Representative license, and similar to the Series 7, one must be associated with a FINRA member in order to sit for that exam. And then finally, the Series 65 license is designed to qualify its holder as an investment advisor representative. Unlike the 7 and 82, one does not need to be associated with a FINRA member firm in order to sit for that exam. So that first category sort of touches on a category that a lot of commenters have been asking for of late, the category of a sophisticated investor. And so the Commission is putting forth this proposal as partly in response to the desire from market participants for a sophistication category in the accredited investor definition. Sarah, I should have said, feel free to interrupt with any questions you may have during the presentation. We'll have some time for questions after, but feel free to interrupt as you do so well.
Thanks.
All right, so that's the first category, sort of sophisticated folks. The second category of people are knowledgeable employees of certain 3C1 or 3C7 private funds. When we say private funds here, we're talking about like hedge funds and private equity funds. The inclusion of knowledgeable employees in the definition would permit individuals who participate in a fund's investment activities to invest in that fund's securities offerings. The definition of knowledgeable employee would be the same definition that's already used in 3C5 under the Investment Company Act. So that's the second category. The third category of people are family clients of certain family offices. Family clients is a defined term, and it's from the family office rule. And it's basically family members, former family members, and certain key employees of the family offices. We'll talk about family offices when we get to the categories of entities that are going to be or proposed to be included in the proposed definition expansion. And so the fourth and final category of people are spousal equivalents. The Commission's proposal would permit spousal equivalents to pool finances in the same manner as spouses are able to do under the current rule when determining net worth and when determining annual income. So adding categories of people, four things. The Commission is proposing to expand the definition for certain persons holding certain professional certifications or designations or having other credentials. The Commission's proposal would include knowledgeable employees of certain private funds. The Commission's proposal would include family clients of certain family offices, and finally would allow spousal equivalents to pool finances. So that's sort of the overview of the types of natural persons, human beings that are being proposed to be added to the definition. Let's talk about my second bucket, which is categories of entities. There are 6 entities that are proposed to be added. SEC-registered investment advisors, state-registered investment advisors, rural business investment companies, limited liability companies with more than $5 million in assets, family offices with more than $5 million in assets under management, and finally, a catch-all for entities owning investments in excess of $5 million. I think that last one is probably the one that our viewers will have the most interest in, so I'm going to talk about that one briefly. The catch-all proposal is intended to capture entities not currently included within the definition. Think Indian tribes, governmental bodies. Similar to the requirements of 501(a)(3), the entity could not be formed for the purpose of a specific investment, and the entity would need to own more than $5 million of investments. And with the amount of investments being calculated under the same way that it's calculated under Rule 2851(1) of the Investment Companies Act. Similar to what the Commission is proposing to do with knowledgeable employee, we're trying to use defined terms that market participants already have some familiarity with in the hopes that it will ease compliance for both issuers and investors.
Charlie, this is worth emphasizing, I think, to the audience, because I think people were used to the concept of the existing entity definition was asset-based. And so we've now got another definition, which is investments-based. So could you just maybe explain the distinct, who gets which measure and how this is different than the definition we were using before?
Sure. So it's an important distinction. You're right, Sarah. The previous, a lot of entities previously always looked to 501(a)(3)'s assets in excess of $5 million, but the entity list there was pretty limited. It was 501(c)(3) entities, it was corporations, it was partnerships, and there was the staff interpretation that also included LLCs into that group. But that was the group. That was the universe of entities that could use it. And so if you elected to organize your entity with a different corporate formation, you weren't able to use that one. Here we are expanding the types of entities that can be qualified as accredited investors, and the commission went from assets to investments, and it requires, if you take a look at how investments are defined in the Investment Company Act, it really is meant to have entities that have familiarity with the securities market and familiarity with the investing process, not merely an entity that maybe owns, the one that comes to mind potentially is the school board. Many school boards probably easily have more than $5 million in assets. You have property, you have school buses, you have, properly plant equipment kind of stuff, but you may not have $5 million in investments. And so in order to take advantage of the catch-all, if your entity is not one that is already included in 501(a)(3), you'd have to move over to the investment step. And so that sort of covers the universe of humans and entities, and there's a few little miscellaneous things that the proposal seeks to amend. And let me go through those quick. The commission is proposing to codify a couple of staff interpretations. The first one is that the calculation of joint net worth can be aggregate net worth. In other words, not limiting the term joint to the legal concept of joint ownership. Instead, just joint as more of a perhaps colloquial feeling that you can use aggregate net worth of each individual spouse to come up with your net worth number. Second, and related, the securities being purchased by an investor who is relying on the joint net worth test, those securities do not need to be purchased jointly with the spouse. You can just purchase it separately. And finally, the final staff interpretation that's being proposed to be put into the rule is that when you're determining accredited investor status for entities where all of the owners of the entity are themselves accredited investors, even though the entity may not be, then one may look through the various forms of equity ownership to natural persons in determining whether the entity itself can be considered an accredited investor. So that's the three sort of staff interps that are being proposed to be included. There are two places in our rules where the accredited investor definition exists. 501(a), which is probably the most well-known, but also 215. And since the 80s, the commission has intended for those two to be congruent. And so every time we amend 501(a), we make the similar amendments to 215. And in our proposal, we're proposing to make that process more hand in glove, and by replacing 215's definition with a cross-reference to Rule 501(a). And then finally, Securities Act Rule 163(b) and Exchange Act Rule 15G1 both incorporate a list of institutional accredited investors within their rules. And the commission is proposing to amend both of those rules to add to those lists of institutional accredited investors both the catch-all category and the family office category. These changes would permit investors to take advantage of Rule 163(b) to test the waters with additional institutional accredited investors, and would exempt those institutional accredited investors from the penny stock disclosure rules of 15G1. So that's sort of the three buckets: humans, entities, miscellany. I'll talk briefly about the types of comments we've received. The comment period is open. It's open until March 16th of this year, 2020. I would encourage all our listeners to write in with your comments. The staff reads those, the commission reads those. We want to hear from you guys on what you think. The comments we've received so far are generally very supportive, but we would look forward to hearing any input you guys might have.
Okay, well, thanks very much, Charlie. It was very useful, and I'd just like to emphasize one of the things that you said, which is comment. Even if you think that everybody has said what you you particularly believe in. It's really easy to comment. You can just send in a little email. You can just enter the comment right on the comment site there and just say, I agree with all of it. Because one thing that I've learned over the years is sometimes if the Commission proposes something and you think, yeah, it's a good idea, and then it turns out a whole bunch of other people don't think it's a good idea, and they comment and you don't, the Commission has to listen to the people who actually talk to them. And they do listen, so please everybody comment. I'll talk to Devin to make sure that we have a link that takes you to the place where you can comment. Couple of questions, Charlie. Everybody's very keen, have been keen for a long time to expand accredited status to a wide range of potential investors. But there's the links. But the Commission only expanded the status to only a few categories of investors. And I get the impression this is not the final word. But could you talk about the reason behind the cautious approach, as I would characterize it?
Yeah, I think the amending the definition it's a big change. The Commission hasn't amended AI in quite some time, and since 81, 82, when it was first promulgated, hasn't touched it that much. So I think the Commission is cognizant that this is sort of a big deal, and they're trying to be very purposeful, or maybe perhaps cautious, as you said. Looking beyond the traditional factors of income and net worth is big. So I think they're trying to be cautious in their approach, because I know they want to get it right. And so getting to Sarah's earlier point, getting the feedback from our listeners on what you like, what you would propose to do differently is helpful.
Oh, thanks. And along the same lines, I note that in the proposal, it looks like there's a process for this not being the last word, to be able to add certain categories. Could you just go through what that is? The question I have is that going to be easier than doing rulemaking in the future?
Yeah, that's a good question. It is not, the process you're talking about is not a rulemaking, so it's out of that sort of rubric, but there will be a notice and comment period. But what Sarah's talking about in what we can say the sophistication-based category, the categories from which, if adopted, the order to approve the Series 7, the Series 82, and the Series 65 licenses as meeting the criteria, that process is what Sarah is mentioning here. And you're right, it's not a rulemaking, and so there may be some efficiencies to be gained there. But it is the notice and comment process, because the Commission is eager to hear from participants what they think would work, how they disagree with what we're thinking, and so that process is going to be in place. Some of the things that are involved, I touched on briefly, is there's a sort of non-exclusive list of attributes that is going to be embedded in the rule, to make sure that the designations and certifications are up to a high enough standard that the Commission would feel comfortable granting them, folks who hold these certifications or designations, AAI status.
Yeah. And another question that I had personally is, roughly 10% of the population right now is accredited, and one of the reasons that they are accredited is because it's by reference to a financial standard, which is affected by inflation, for example. And I was kind of curious to see why this round there's no thought of adjusting those financial standards for inflation. And before all our audience gets excited, nobody is proposing that we change the standards to you can't be accredited unless you have 2.5 million or something like that, which people were very worried that happened. Nobody's proposing that, but inflation would seem like a no-brainer, but not included this time. Is anything we should know from that?
It's a point that's raised a lot, whether to adjust for inflation. We got mixed comments on it when we did our 2015 staff study. We got mixed comments on it when we did the harmonization release last year. But you're right, there is no proposal to do a one-time upward adjustment from the 80s now. That's not being proposed. It's also true that it's not being proposed to do a going forward adjustment like every 5 or 10 years or something. Instead of doing that, the commission is proposing to have the staff consider the whether to adjust for inflation as part of our Dodd-Frank review that we are obligated to do every 4 years. So it's not something that the commission is not thinking about. They're thinking about it, and then we're going to continue to think about it moving forward.
Okay.
Hey, Sarah, I've got a question from our audience. May I interject that question?
Go ahead. I think I see the question there.
Okay, do you want to read it? Go
No,
ahead.
go ahead.
The question was, will there be a provision for the qualification of sophistication for non-wealthy investors? And if so, would that qualification exercise be outsourced to third parties, perhaps like the CfPA, the group that's hosting this webinar?
So the answer is a twofold answer. Is there a new proposed category for folks with sophistication? That answer is yes. And that points back to that process that Sarah and I were talking about a moment ago, where the commission has proposed a list of attributes for a professional certification or designation or other sort of educational attribute to be vetted and approved at the commission level. Currently, there is no proposal to include a sort of an accredited investor examination, although we have asked for comment on that issue. And if you are in favor of having an AI examination, we would please write in and let us know. So I guess the answer is yes, there's a sophistication category. No, there's no current proposal to have an accredited investor specific examination.
Okay. One thing I should point out is that the Crowdfunding Professional Association did comment and did raise the possibility of having such an examination under the auspices of an organization like this. And so if people agree with that, all you have to do is just log on, make your comment and say, we agree with the CfPA in this respect. So that's all the questions we have from the audience, right, Devin?
Yes.
Right, yeah. Just one final question, Charlie, is at some point, I see people say, well, look, currently 10% of the population or so is actually accredited, although a whole bunch of them don't know that they are. If we add all of these guys, including the people who are accredited through some kind of test, are we now creating a private market that will exist for 20% of the population, and 80% of the population, people of modest means maybe, just won't have a chance to invest? And is there something that, is that something that we should be bothered about as a community?
It's a fair question. What the commission wants to do with this proposal is to appropriately expand the pool of accredited investors. But to Sarah's point, it is true that absent just getting rid of the accredited investor concept altogether, which is not what is being proposed here, but absent that, there will always be a category of non-accredited investors. The chairman it's very important to him to get retail investors exposure to markets that they don't currently have exposure to. I am not sure that the definition of accredited investor is where is appropriate to that end, but it is something that the chairman is is focused on.
Thanks. And so watch this space. I mean, there's a lot of things that are going on, many of which are in response to the concept release from last June. And I think we are expecting to see other things in our market develop over the course of this year. And so everybody pay attention. And if I could just say one thing again, finally, do comment, because, you know, the SEC listens to these things. When I was a staffer, we were always thrilled to get those first comments in. And then
Sarah, I would just say that I'll tell your audience right now, I will personally read your comment if you send it in. I promise you.
All right. So keep them short, keep them snappy, and Charlie will read them. So thank you very much, Charlie, for spending some time with us today. Thank you, Devin, for setting this all up. And I think that's it. Thank you, everybody, for listening.
Thanks for having me.